Welcome to Onchain Capital, your front row seats to the future of finance, from Web3 innovation and digital asset policy to the power shift between East and West. Today, we're unpacking it all with Xin Yan, founder and CEO at Sign. His company has powered over $4 billion in token distribution and is currently the technical partner for sovereign blockchain initiatives across the UAE, Thailand, and beyond. Xin, thank you so much for being on the show today.
Thanks, Sean.
So, Xin, I know you're traveling today, so that goes to show that when you are, on your business travel trips, you have an opportunity to speak to many ecosystem partners and as well as sovereign parties as well. But before we dive into some of the topics that we want to uncover around central bank digital currencies and stablecoins and interoperability and all of the wonderful work that your company is doing, maybe a little bit of background about yourself and also what Sign is really focusing on, and then we can dive into the topic from there.
Sure. So about myself, I was an engineer. That's how I got into crypto with mining, and I also spent 3 years in investing, mostly venture capital, and then 5 years ago, me and my co-founders founded Sign. And we basically, our journey is started as a crypto native company. We build services, applications for the native circle, and but gradually we realize, so it's more important to have crypto integrated to the real world. So we start to work with real life people, and we also realize government is actually the gatekeeper to the real world asset, real world user base, real world services, basically everything real world. So we start to work with governments by building the most important, I would say, digital infrastructure, which is digital ID and digital money.
Got it. Okay. So let's get something out of the way, right? In previous episodes, I've had several guests talk very specifically about digital money on the blockchain. And most of the time, that is in the form of a stable coin, pegged under whichever currency, right? Could be US dollar, could be euro, could be others. In some of the work, I was doing some research before we jump on the episode today. Your company not only focused on that, but you do a lot of work with CBDCs, right? That's central bank digital currency. So maybe kind of help the audience get a feel about, if we have stablecoin, and then we've got on one side we've got stablecoin, which is kind of privately issued, digital currencies that are pegged to fiat currencies, and then on the other side you've got central bank digital currencies, and people are always kind of arguing, do you need one or the other? What's kind of your view around that?
Okay, so yeah, it's very interesting. I don't think a lot of people understand what is CBDC, and some people see as a evil government centralized controlled fiat.
Big brother.
Yeah, but it's really not. It's CBDC and stablecoin is totally a different thing, and this basically stablecoin is low tech stuff. Is more like payment services, right? So you basically have $1, one currency, fiat currency in bank, and you issue one token on chain. And basically, you're using public chain as the settlement system, the payment system, to facilitate whatever. But central bank digital currency is you can see as a system, as an operating system for central banks, right? So central bank in a sense, I would say the current world, right? So all the money is printed by central bank, and you can see. Basically, every country launch a token, and the central bank is who to manage the tokenomics, right? Who to manage the supply or say buyback or whatever, right? So, central bank digital currency is a system that central bank use to control the tokenomics. So, as I see CBDC as a natural involvement for central bank, right? So you can't central bank also as an institution, also gonna evolve, right? You cannot like process everything by paper. Also, by
Hmm.
the way, if you're using like we're still living in a fiat world, we're using fiat, and say if you transfer money across commercial banks, it goes through central bank. And right now, the current system called RTGS, which usually costs 1 day for
Hmm.
cross-bank settlement, and we all crypto people all understand. Okay, with the current technology, we can make it real time. So CBDC is actually a private blockchain, and all the nodes are deployed with central bank and different commercial banks. So basically, it's a ledger of fiat, and to modernize the current fiat system, so central bank have better understanding of how the money flows, and um, they can better control the tokenomics to benefit the country. Also, is also CBDC is a super practical thing. So firstly, every CBDC as a token is a legal tender, so don't worry about its impact. And also CBDC, just like the payment service we're using in real life, like Zelle, Venmo in China, Alipay in Korea, Samsung Pay. So you have privacy features, right? So like
Yes.
if you're using stablecoin, the one of the problem is if I know your address, I can monitor your address. I know like how
Right.
much money you have, who you're paying to, who you're getting money from. Like but CBDC is naturally, right? So you shouldn't know, or you cannot monitor people's transaction. So there's a layers of privacy, right? Like uh, central bank can see through commercial bank can see through their clients, but like clients cannot see through each other. So it's more like real life payment system backed by blockchain.
So that's really interesting. I mean, I've always looked at stablecoin less as a unit of currency, but more as a payment rail, right? Exactly as what you have mentioned. I think in the beginning it was created as a settlement, rail for cryptocurrencies, obviously, so you can get in and out of bitcoins and other crypto assets. And then obviously now with the advent of stablecoin that are really being used for cross-border payments, then again that's the rail. But at the end of the day, you still need the facilities where you can get on and off back into fiat, right? In whatever currencies that they're going. And I think you just highlighted something that I don't think I've heard of very often, which is the notion that CBDC is really a way for the central bank to manage and govern the tokenomics, right? So essentially, I guess if we were to use traditional terms, it's almost like it's a digital ledger to manage your monetary policies. It just happens
Yeah.
to be now all digital native. But here's one thing I wanted to ask you though, right? If you look at some of the CBDC projects around the world that are already available today, right? So obviously you have the ECNY in China, you have the eChrono in Sweden and a few other places. Most of these CBDC projects aren't necessary on blockchain. And for sure, most of them, if any, are probably not on public blockchain. So if you've got kind of private environments running these things, then wouldn't interoperability be a massive problem? Like when you're working with different sovereign governments around the world, what are some of those conversations in terms of not only operating domestically, but also operating across jurisdiction?
Um, Firstly, there's one thing I want to clarify. I think based on my research, most of the CBDC project are based on blockchain, but they're not like public blockchain. So most of the
Mm,
system are based on Hyperledger Fabric or like R3.
right.
But personally, I don't
Yes.
like R3 too much. So mostly Hyperledger. And the
Yeah.
CBDC, because it's a system providing services to real life people, so naturally people don't sell the technical terms, right? When we sell
Mm,
CBDC, we don't say it's a blockchain because nobody gonna pay for a blockchain. People will pay for
right.
real time settlement. So like
Right.
we just emphasize features. And for cross-border stuff, so basically basically it's not that hard. I think um like in crypto, right? We have different blockchains and there's a protocols for to basically build a bridge between different blockchains.
Cross
It's
chain. Yes.
yeah, between public chain if it's doable,
Mm,
and between private chain it will be much easier. And
much easier.
Yeah, it will be much easier, right? So because like
Okay.
if there's some problem, you can call central bank. Okay, this transaction has some problem.
Right.
Like public chain have more like problems because all the nodes need to sync up or like something. So um like they are like services. I think that also in the CBC circle, they also have similar projects doing promoting like cross-chain bridge or cross-border bridge or the multi-chain interoperable framework. One of them is called
Hmm.
Mbridge,
Yes.
and I think that's the most widely adopted frameworks. Basically, you using it very much like substrate, right? So like or like say um like just like OP stack. So you can a
Hmm.
country can easily based on this system launch a blockchain and launch your currency on this blockchain, and different blockchains can add liquidity pool and send to each other. So it's tech is not a too big problem. I would say the big problem for tech is only on the TPS, the performance
Mm.
bandwidth. That's a problem. But cross border payment cross chain is not a problem.
So you talk about Enbridge, and Enbridge has been around for a number of years, right? It started with China, Thailand, Hong Kong, and I believe it was the UAE, and then since then there have been many other countries that have joined in. But when I remember talking to folks at the Bank for at BIS, right, Bank for International Settlement, that have worked on the Enbridge project, and there were a lot of challenges, maybe less so from a technology or technical perspective, but more from a liquidity management perspective. I remember talking to someone from the Bank of Thailand, and they were mentioning that, in the traditional way, they manage primarily the US dollar and the Thai baht, right? That's what they keep within their ledger, and how they manage kind of the government's treasury. And now with Enbridge, you have many more currencies that they need to keep because pretty much every member within the framework will now need to have some notion of liquidity for the other currencies to be presented. Otherwise, you're not going to gain that efficiency. So I remember, he was telling me, look, it's actually the design is actually quite interesting, but in reality, in execution, in managing now the Chinese dollar, the Hong Kong dollar, and the UAE dirham becomes much more of an operational headache than a technical headache. Have you kind of looked into that and see how that have been evolving? Because that was probably a conversation I had 2 years ago. So maybe things have changed and evolved from there.
Um, so so firstly, I would say like so like say right now like if on the publishing
Mm.
side, right? If you have a token, listed token, you add liquidity pool to a token on a public chain. Sometimes you add it to pair with ETH. Sometimes you pair with USDC. Sometimes you pair with different assets, right? So like
Yes.
and there will be people who run the triangle like arbitrage. So basically making sure okay they provide liquidity as long as there's enough liquidity, there's enough like transactions happen on these like trading pairs. There will be people putting liquidity there to make money and making sure all the price are same.
Hmm.
And I will say the same thing in the national the fiat world. So the system is not a problem, liquidity is not a problem. The problem is really the demand of have more liquidity pairing currency. So
Right.
that's not something. It's not a financial problem. It's more like political problem. I would say so. Start from 2026, we have seen this world become more dramatic. Like it's only been
Yeah.
2 months in this year, and a lot of things happens, right? So
Yes.
like we've been seeing, okay, this world is countries are split into different camps. Like there's not just two camps, there's many different camps.
Yes.
And so people are looking for alternatives, or like people are looking for because there's different camps, people need different systems. So people
Mm,
are looking for alternatives. Okay, so like some of the country previously they only have Swift, but right now they worry about, okay, if we got like we've been put into a great country in CFTC, or like sanctioned, I guess, by Swift or whatever, like there will be huge trouble for us all. Like so they're looking
yeah.
for alternatives to buy stable coins or do CBDC. So that's something happens very recent. So very recently, like people see, okay, we have to basically compatible with more systems, and
Mm.
then they realize, okay, so we have to add liquidity pair with different multiple currencies, and things start to happen. I would say it's more like geopolitical stuff. It's not really finance.
Right. So you've got the kind of the technical dimension, and that's with more and more evolution in terms of these technologies that are made available. Obviously, that. I mean, it will always be a challenge, but I don't think it's a challenge that it was, kind of 5 years ago. And then you kind of mentioned the liquidity side, the monetary pairing perspective. So that obviously needs to be looked at. But you're right. I mean, over the last 12, 18 months, the world have moved in a very different place, right? And we don't have to go into details here, but I think everybody kind of understands where that is. I think even in a lot of conversations that I have been having, the notion to have alternatives is very, very important now. And obviously, Swift is still going to be the primary vehicle, especially for larger transactions. But I remember recently I was in a conference where we were talking about the BRICS Pay, right? And the BRICS kind of ecosystem, so to speak, that's continuing to grow. And there's now talk about potentially having a BRICS based currency that's going to be highly unlikely going to be pegged to a single kind of sovereign currency, because obviously, what's the point, right? If you're moving kind of away from the US dollar, then it doesn't make sense to move to another single jurisdiction currency. So it's going to be perhaps some sort of basket approach, multiple currencies, potentially with also gold and other commodities being part of it. And there's so many different exercise
So,
and
I want
projects.
to
Yeah,
share something interesting. We're also
sure,
doing a lot of
absolutely.
projects in Africa or like different places. So in
Mm.
Africa, there's a currency, there's a cross-border currency called so basically um the 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 mobile telecom fee. So you by minutes, right? So you the basically the fee by minutes. So so by minutes it's a currency, right? So I give you 10 minutes of calling, and
I see. Okay.
people can use it as a currency. And
Mm. So it's like
I think,
timeshare in a sense. It's
yeah,
like
it's called mobile
timeshare,
money.
right? In a sense. Yeah.
Yeah, yeah, it's
Mm.
called mobile money. So like people can send this to, like, say if we share the same like telecom service provider, and we can transfer money in this way. And there
Mm.
will be new currency packed with electricity. And I've been seeing a lot of people started doing this. And so in the future, um, like basically we're talking about the system, that the ledger, okay, the almighty ledger, a better ledger. And but what's the currency really packed into? Is it always like a
Mm.
national trust, or like or like say something else? I'm pretty sure there will be some new format like electricity become a currency or something.
But I guess the major challenge in that is it needs to be recognized, right? So if it's something that's a currency or commodities like gold, then it's widely kind of accepted. So as long as you have the proof of reserve, the attestations, and that it is backed by something, then it's obviously going to be more accepted. In that sense, the it's probably more of an ecosystem play, I would think, right?
Yeah, it will be original.
Electricity or yeah.
Say
Mm.
the Western African countries, because they have a network, they can transfer electricity to each other.
Yeah,
So like
yeah.
they can recognize electricity as a currency or something. But because sometimes like in China, US is big country, like you have strong currency, but a lot of places like South, like Latin America or like say Africa, where the mostly like is a lot of fiat currency and none of them is super big. So like usually for these kind of area, if you want to have a current invented a currency that have consensus, they usually pick on something else.
Mm-hmm. That's very interesting. I gotta look into that. That
Yeah,
sounds fascinating.
it's happening.
The
It's
the
happening.
it's happening. Okay.
Yeah,
Okay.
it's happening.
All right. So let me look into that. So talking about Africa, I know in talking to a number of my partners there, they are essentially starting to look at a pan-Africa type of ecosystem, monetary systems. Some of it is based on CBDC, some of it is stablecoin based, but essentially connecting the banks in a new form of architecture rather than in the old. The banks are still there, right? But in a new architecture. But I also noticed that a lot of them tells me that obviously the infrastructure in Africa still needs to kind of catch up in a sense, right? So a lot of them are looking at using the UAE as a settlement center, right? Almost kind of the MENA hub for capital markets and for payments and transfer. And I know you guys have Sign has kind of been working with a number of players in the UAE. You work with the government, obviously, on the digital dirham project, but you've also have partnership with the Abu Dhabi Blockchain Center, a partner that I'm very familiar with as well. So maybe talk a little bit about what you see in the UAE. Are you starting to also see this aggregation in terms of the African kind of economies converging into a place where they've got the slightly more advanced ecosystem and infrastructure for them to actually facilitate and to get to where they need to go.
I think so. But basically, like there's a couple of things. Firstly, I think so. Basically, in every area, like it tend to be one country promoting a protocol for all its neighbor country, and they become their own like network. Like in Singapore, Singapore have nets, right? So like
Yes.
all the other like India or like Malaysia, they join nets, so they have their own settlement system, and they don't want to because the reason is also very simple because they don't want to use Visa or MasterCard to pay them too much, and they're far away from them,
Mm,
right? So
mm.
like similar to UAE, I think UAE is the most technical advanced country in the MENA area, and they're also very ambitious. They have a lot of influence over many countries, so they're promoting their protocol, they're promoting their infrastructure, especially digital infrastructure. They're helping a lot of countries building their from data center to government services. By the way, I think UAE have the best like e-government suite, right? So like they have UAE Pass, they have um sorry, I forgot the name. Basically, there's an app like you can do whatever into this app, all the like government affairs. So like they also promoting a payment protocol across this area, so that's natural for them. And so our work with UAE is there's a couple things. We're mostly focused on ID and money. So on ID side, I think UAE is gonna keep innovating on based on UAE Pass. So they're gonna make it more open. They're gonna make sure a identity can be cross-border verified, and the cross-border verifiable identity is huge for cross-border payments because it will be
Absolutely.
accelerate a lot of for the clearing time between banks or something. So that's one thing. And second about the CBDC. So UAE basically already have a wholesale CBDC. Wholesale CBDC
Mhm.
means CBDC between central bank, commercial bank. But it's still at the institutional level. And the UAE is also working on like at least so on the retail side. So basically, people can have um so like everybody can have CBDC in their own wallet, in their own app. So the user experience is very much like Samsung Pay or Alipay or like in Singapore, like Pay Now, right? So you can scan, you don't worry about which bank you're using. You scan the QR code and pay. You'll get it in seconds and no fee basically. So that's UAE also promoting. Yeah.
That's so almost similar to some of the existing infrastructure that other cities or jurisdictions like Hong Kong, where we have FPS here. It's also a QR code system, and it doesn't matter whether you connect to a bank or you connect to an Alipay wallet or WeChat Pay wallet. Essentially, it's a same consistent interaction. But then, of course, today is powered by fiat, and it doesn't mean it cannot be powered by other forms of currency. So I can certainly see that. One thing that you mentioned that kind of caught my attention earlier, you talk about the trust, right? And I know obviously Sign focus a lot in this area. I have I've always thought about this notion of digital identity or decentralized ID or whatever fancy terms that comes out these days. One of the key challenges, how do you get jurisdictional recognition? Essentially, if you have a ID token that have been issued by one vendor or one issuer from one jurisdiction, like how do you actually use it in others, right? Because as you mentioned, every jurisdiction have their own digital ID system. So essentially, you're almost like an ID oracle, so to speak, right? To bring it all together so that you have a consistent way of doing that. How do you guys look at that when you work with these different jurisdictions?
Yeah, I would say it's so a lot of things already exist. Like we just digitize the system. So
Mm,
example is like the passport system we're using. So most of the countries, except like India, is not one of them. But by the way, so most of the country we're using ICAO passports, which is called biometrics passport. So within the
yes.
biometric passport, there's a chip, and
Yeah.
within the chip, so there's all your information and with a digital signature. So the signature
Mm,
is basically just like a blockchain transaction. So it's signed with the country's public key, a private key.
mm.
Okay, so
Yep.
like
Yep.
when the other people want to verify if this passport is real or not, they just because it's open source, right? Everybody know which countries like every country's public key, so they can easily verify if this passport is signed by the country or not. So this system already existing for 20 years, and we're basically moving this like from physical version into a digitized version. We call it verifiable credential, right? So basically, we
Mm,
turn this framework from a sovereign level, country level, to all department level, right? So like all the so university driver licenses, driver school, or like say government, they can issue different credentials. Um, with signatures, and so whoever want to verify this, they just go through the protocol to verify it without, so they don't need a API call to the issuer to verify the credential. So this is something like I would say mostly is simple to understand, but it is the success or the deployment of this kind of system need a lot of coordination, and they will
yeah.
need a lot of support from government. So that's why we have to work with a country like UAE or the other like leading country. These countries they want to put themselves at a leader position and talk to many different countries and coordinating them adopting the same standard.
Yeah, the coordination is quite important. Either it's the tokenization standards or the monetary policies that underpins these digital tokens, and then obviously now, as you just mentioned, the trust layer that actually understands who's actually sending these. I mean, look, maybe we'll leave this as a last question, right? We've obviously been, I think, throughout this conversation, we've been talking about mostly human actors, right? Human actors that are either individuals in enterprises or at the government level. But then, I mean, we're now in the age of AI, right? You could essentially have AI agents that are operating these different forms of digital currencies for the purpose of either investments or capital allocation or for payment. How do you see that? I mean, maybe the last questions before we close it off. I mean, this thing is fast approaching, and are you guys working on things like that? Are you in the conversation you're having with the government, with the sovereigns? Are they looking at that as well? I'm very curious actually to hear your perspective there.
Yeah, we have a couple initiative on this, like mostly from two angles. Firstly, we're like, well, our company is specializing in building digital ID and digital money, and
Hmm.
we can say agents or robotics as digital primitives. They're actually a huge it's fast growing user base of our product. Because
Hmm.
mostly when we talk about this, we think about, oh, this is for human, but it's not, right? So do robots need an ID? Yes. Do
Yes, for
drones
sure.
need an ID? Yes. Do like um do like agents need an ID? Yes. Like we soon gonna push a product called Know Your Agent, QIA. So like it's
Very
actually
interesting.
yeah, it's actually very much makes sense. You know, there's a very interesting showcase. So right now, there's something called geofencing if you play drones, right? So like, so drones, when you enter a country, so they will
Hmm.
take the drones. There's a code. So basically, they
Yes.
tell the drone, okay, in this country, there's certain area you can fly to, there's
Yep.
certain height you can fly to. So, and also they can monitor where is the drones. So, right. So because it's digital primitives, naturally, so you have the ID given to the drones, and the drones know, okay, where can I go and where I cannot go. And people, as a country, you need to making sure you have digital sovereignty, right? So you also know, okay, who are the robotics, who are the drones, who are the agents that are doing something
Right.
in your country,
Right.
and how you're managing them, right? So like. So actually, DID also means drone ID, and so the ID system is used a lot in the digital primitives, um, as we speak. And the other perspective we're also using AI is on processing data, because I would say AI or large language model chatbot changed the user interface forever. Like previously, we have a lot of like visual data visualization platform. Like, but right now we only need a large language model. Like, and
Yeah.
you can imagine, like, basically our work, in a sense, our work is necessarily digital transformation. Like I said, so like central bank, which is the most important government thing, currently is not digitized, and there's too many people. Too many people. Some of people will lose their job.
Hmm.
Um, Basically, with digitization, things can move better, and our system basically unify the system and digitize them and creating a lot of data. And firstly, all of these data will be a a great resources to all the AI, because right now I think AI is very close to AGI, but the problem for AI is they don't have enough data. They don't have enough
Hmm.
APIs. If they have more APIs or more data, it will be super strong. And right now we're basically unifying the infrastructure and make it more like make it like a we'll create infinite data for AI. So there will be a AI that understand your country's economy better than everybody. And what you do as a governor or central bank, you just ask who's laundering money, and it
Hmm.
will give you a perfect answer, right? So
Right.
that it will come. Okay, so um um yeah, so basically we're also using AI for currently only for data visualization, and yeah, I think that's a game changing feature.
It's happening fast. You have in the stablecoin space you have x84 and some of the newer protocols that essentially can start moving money left, right, and center between wallets and between agents, right? And so this is that was only 6 months ago that was announced. So these things are happening fast and furious, and I look forward to the day when maybe less about the laundering money part, but maybe the central bank can actually say, okay, we're going to do a stimulus program. Which sector specifically where and how and which segment they need to be funneling that money rather than kind of just blanket, everything out. Like that would be much more targeted. And I would actually feel like the notion of a CBDC that may feel like it's a little bit more control from a central government perspective actually have the most maximum benefit in terms of how that is actually driven. So look forward to that day, and I think it's probably
Yeah,
going to
one
come
last
sooner rather than later.
one last thing I want to talk about CBC is the government control is usually it actually just so basically we all ask the fiat currency holder, right? So we want central bank to
Yes.
make better decision to make better under tokenomics. So you want government control better under tokenomics, but what you don't want is privacy control, right? So you don't
Yes.
want to see through your to basic surveillance like everybody's like transactions to freeze your money or such stuff, and by that I would say there will be a lot of technical solution we can apply and stuff. So no need to worry too much. But on the good side, right? So if a country can understand fairly on its tokenomics, on its economy, and making better solutions, so a lot of country will better off. I think many country. So central bank is a system created by West like England and later U.S. But many countries fail to understand how to really run a central bank. That's why you see many failed fiat currencies. But the new system will help them. And I think every country should have their own currency still, right? I think every country, not every country should using a US dollar and pay for their debt. And
Right.
yeah, we'll just make everybody life easier.
Shane, thank you so much. This has been incredibly insightful. We talk about the different forms of digital currency, CBDC, stablecoins, and whatnot. We talk about geopolitics from the perspective of these digital currencies. We talk about digital trust, and then we cover AI, right? And wrapping everything else around it. So fascinating insights that you provided. Thank you so much for coming on the show, and I look forward to seeing you again.
Thanks, John.